Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They have also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. We're going to start with gold here this week because gold is starting to flirt bullish. I know I said that last week. I'm going to second it this week because we have had a pretty strong move up in gold here over the last day or two, pushing up from around 1800 up to above 1830 and inching its way back up again. Now, what I'm looking at on the short term here in the gold chart is we've been building this kind of rising channel that has been flirting with going back to the beginning of the month and the end of last month. We had this declining floor that you can see on the chart that sort of sets where we're going to have a fair bit of resistance on both sides of this declining floor on the chart. Now you can see we've touched it multiple times, finally broke above it, used it to place our foot firmly down on the ground and have taken a big jump up in the last day. So with gold pushing up to 1830, I would argue our next potential resistance is around 1840. And then ultimately, you can't call bull market until you've put in some consecutive higher highs and higher lows, and preferably beating some higher pricing from earlier in the downwards trend, namely going back to around November, December, where we put the last high in around 1950. So we're going to want to see gold take another step up, and it certainly could here up into the high 1900s, low 2000s, and then you would argue we're off to the races, very likely going to exceed the 2080 high we put in last summer and pushing up to whatever the next price gold decides, 2,500, 3,000, 3,500, 35 million. It doesn't really matter because that all has to do with where the US dollar is going and what our current administration has plans for as far as spending goes. So looking over at some of the other metals as gold is starting to climb, I do want to second this specifically with platinum because I think platinum is kind of leading the charge here. Now you can see on the gold chart where I have this next level drawn at around 1840. That's when we broke below and turned bearish in the short term over the last couple weeks, and you need to push above this pricing level in the short term to start arguing we may be looking at a long-term bull market. Now, the reason I look back at the gold chart before moving to platinum is you can see the exact same type of pricing movement in platinum since the middle of June, just like gold, except platinum has, as of today, pushed above that pricing level, of which is around 1130. So platinum is leading the charge short term here in the precious metals with gold a few days on its heels. It is very likely if platinum were to continue up over the next couple days, gold should push above this same relative price level and follow suit. Now, silver this time is the one that's kind of lagging behind. Silver has been stuck in this sideways trading channel for quite a while, going all the way back to September of last year, where it put in its lowest price and has inched up since then. So silver, after putting in that bottom in September, has put in consecutive higher lows and one higher high, but currently sits kind of sideways, stuck near the bottom of that channel. I would actually like to see silver take one little dive down, maybe to around 25 and a quarter, hit that bottom support level, and then shoot up pretty aggressively after that. Now, if we see platinum continue up, and we see gold break above this next resistance level, then it's very likely silver would continue up alongside of it. Now, all of this should coincide with the dollar very likely going to find top here in the next week or two. The dollar has been making some compression upwards. It is closing in on the high we put in back in March at around 93.5, but it's doing it with compression and RSI divergence, which tells me we may have one or two more pushes up in the dollar, and then I'd expect to see a turn down in the dollar coinciding with a gold rise, a platinum rise, and a silver rise. So other than a charting perspective, Tori, is there anything out there that would make you think the dollar is possibly losing a little bit of its luster?
Well, yeah, just look at the CPI numbers that just came out and the fact that the Fed is in panic mode with trying to do damage control. Powell's in front of Congress trying to convince him this week that easy policy is still needed. So you still need economic stimulus, if you will, and that's weak for the dollar in the long term. But yet then you've got San Francisco Fed President Daly coming out saying don't read too much into the CPI report for June. Not only that, but then she turned around and said that the inflation is temporary and that maybe by the end of the year they could start to taper some of the stimulus or the buyback programs. And I don't see how that's possible, one, with a weak economy, two, with that being the Fed MO for not just years, but for decades. The easy money policy will be continued. Fed's telling Congress that this week. And because that's going to happen, you're going to see gold continue to claw its way up here. Anybody that's waiting for this parabolic move, I'm not predicting that there's going to be a significant event in a short period of time, like a super hyperinflationary month. But if this isn't aggressive for you enough at 13% a year, I don't know what else you need to do. Why in the world would you be sitting in cash?
But didn't they just tell us a couple weeks ago that they're definitely, probably, maybe, hopefully, unlikely going to raise interest rates in a couple years?
Right.
So
that would be strong for the dollar, right? But
yeah, and
I'll tell you what would knock the dollar down too is if another central bank beats us to it. So if other economies around the world can realize that, hey, we actually can start to raise interest rates here. In fact, we need to start raising interest rates here. It's been negative to zero in Europe for well over a decade. Hasn't worked. They're still having to keep it there. So at what point do you try and switch streams and go the other direction? If that were to happen and you'd start to see a rate increase in the European Central Bank, that would really be a black eye for the dollar.
Well, and how much are people willing, especially at a Fed level, willing to go back on the deflationary depression era like we saw 100 years ago? And it feels like it was Ben Bernanke in office spending all those years just trying to prove his personal PhD thesis from earlier in life, just the tremendous damage that a deflationary depression can do and what you can do to stave it off. But unfortunately, it does feel like the solution to deflationary depression might just end up being inflationary depression.
That's right. Don McIlvaney has actually written about that in the Intelligence Advisor for a while now. He said they won't repeat it. That's where Ben Bernanke got his nickname Helicopter Ben, because he said our central bank will not allow that to repeat. We can drop money from helicopters. So that is the MO that I was alluding to. So global government debt has risen to the highest level since World War II, surpassing the world's annual economic output. So nothing's going to slow down. The spending has to continue because they're trying to erase the damage of COVID-19. It's going to take a long time for us to get back up to par. Even though the GDP numbers are looking like they're improving and getting more in line, there's still a lot of categories that are falling. So worldwide government debt, Miles, again, with the U.S. dollar being the world reserve currency, it doesn't bode well in the next 18 to 24 to 36 months for the U.S. dollar, and you should expect the precious metals to continue to have strength in that period of time.
You know, Tori, and that's why we encourage all of our listeners to get with their advisor here at McIlvaney ICA and make sure you're building a strong metals portfolio that's not only going to increase in value or at least maintain your purchasing power as inflation increases clearly over the coming future, but develop a metals portfolio based on things like ratio trading and relative pricing between products that we try to work with our clients on to not just increase the dollar value of your metals, but increase the number of ounces you own.
Yeah, that's exactly right. We get asked, when do you think gold and silver are going to start really turning down? Is the bull market going to end? Should I be moving into cash? Should I be moving into stocks? You move into stocks in a heavier position when you feel as if that market is undervalued. There's nobody on the planet that would argue that the stock market is undervalued right now. You move out of the metals into the dollar when you expect the dollar to have a strong rally. When is the dollar going to have a strong rally to kind of head the opposite direction than what you said? It's going to be when interest rates really start to climb. It's when you have a real viable global, not just U.S., but global economy. It's when you're going to have the U.S. dollar index certainly reflecting a big rally in the dollar because other currencies maybe are having some weakness because they've overextended what they're trying to do. It's not in instances like this. It's not when inflation is the king. You can get little short periods of time where there is deflationary pressure, where the dollar is getting a little stronger. But that's not now. I mean, what I alluded to earlier is a 0.9% rise in U.S. inflation in June. Forecasters expected a 0.5% rise, which is still incredible. And that's stripping out food and energy costs. So there's no foreseeable future here where the dollar actually does see a deflationary wave. And the public's expectations, too, of higher inflation are there. So that's going to help fuel it. And expected inflation a year from now surged to 4.8% in June. And that's the highest level in that survey dating back to 2013. And that's just the reality. People are feeling it. And they're not just feeling it in the numbers that make up the CPI. They're feeling it in the food and the fuel and the medical expenses that are stripped out of that aren't accurately predicted. So hold your metals. Go back, look at these charts, be encouraged today with these prices that we've seen, because it really does bode pretty well for this being a pretty comfortable bottom here this summer.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, but more importantly, pick up the phone and give us a call to discuss your personal precious metals portfolio. We can be reached at 1-800-525-9556. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And additional information can be found on our website at mcilvaney.com. Thanks for joining us this week, and we'll see you next week.